Nigeria's headline inflation now falls to 14.45%, and in November 2025, easing from 16.05% recorded in October. This is according to latest figures released by the National Bureau of Statistics, showing a month-on-month decline of 1.6 percentage points, signaling easing price pressures after months of elevated inflation. Now, on a month-on-month basis, we've seen the figures also which stands at 1.2% in November, higher than 0.93% recorded in the October, indicating that prices are still rising, though at a slower pace. My guest is Mr. Robert Omotunde, is the partner, MDU Consulting, for us to break down these figures around inflation. Thank you so much, Mr. Omotunde, and it's really good to have you on the program again.
Thank you.
Yes, I would like to know what you were expecting. And finally, we are at 14.45%. Looks like we are ending the year even at a figure less than what was projected by government.
Oh, yes. I think that the figure came also desirable, knowing where we have been, at the beginning of the year. Recall that January inflation was reported at 24.48%, at the beginning of the year, before we had that rebasing exercise happen sometime, I think, around March of 2025. Now, if you look at the trajectory from where we had it since that rebasing exercise, after the rebasing exercise, was when we had a recalibration of the January figure. But where we were coming from was much higher. I think we were around about 34% levels or so before we had that, rebasing exercise, which then took us to about 24.23% in March. But then if you look at the trajectory from March to April, May, I think in June, we were around 22.2%, which will still look somewhat within that neighborhood of what the rebased figure reported. But then it was still at that high level, until, of course, we were having the deceleration in headline inflation until, of course, sometime around August, when we now saw a major, should I say, a somewhat a major drop in inflation to 20.1%. And then since then, it looks like we've had 2 percentage points drop at every inflation. Well, with the exception of this one was lower than the previous. The previous, we had almost 2 percentage points drop in inflation. And then now we are having 14.45%. And to your point, it is lower than, or looks like we can close the year lower than is been projected, and that's a welcome development. But then we must also not lose sight of the fact that the figures we are seeing now is a reflection of the rebased exercise. Of course, headline inflation, when you report headline inflation, is measured, year on year. But then if you look at the month on month, we are still seeing pressure. I mean, this month, we saw 1.22% increase on a month-on-month basis. It means that between the previous month and the current month, inflation has gone up by up to 1.2% on a month-on-month basis. Now, it's a year-on-year that is showing a deceleration, which then means that, it doesn't mean that we are not seeing price pressures yet. It only means that the rate of increase in price pressure is moderating on a year-on-year basis, but on a month-on-month basis, of course, is expected. This is the Utah season, and during Christmas, you will typically see that prices may likely go up, especially food prices. I mean, if you look at food inflation, that as was reported in this November now, is 1.13%, a build-up to that Utah period. And the headline inflation overall is about 1.22%. And I dare say that by the time in January, when we are looking at December figure, you are likely to see another uptick in a month-on-month inflation, albeit the year-on-year, we showed that deceleration up until March, when the rebasing exercise took place. I think after March, we can then begin to see, the true picture of what the new level of inflation will be. But I think one thing that the rebasing exercise has done for us is that it has helped to take us out of that, trajectory of 30% levels. Because I dare say that if there was no rebasing exercise, inflation will still be reported at above 30% as we speak, because month-to-month inflation is still climbing. It's not like we are seeing reduction on a month-to-month basis. So there was nothing that was going to bring us out of that 30% threshold in the near term until the rebase period. So the rebase period in this sense, on a 30% level, we now mean that by the time you enter into 2026, assuming there was no rebasing exercise, that's when you now start seeing some sort of moderation. But what we are seeing now is double benefit in terms of headline inflation. And that's why we say, today people will report and say that prices are going lower, because inflation is going lower, or prices should go lower because inflation is going lower. Not necessarily so, because what it means is that the mathematical computation for inflation is moderating, albeit the headline inflation, when you measure it on a month-to-month basis, is still increasing, but then the pace of increase is also desirable because it's much lower as compared to, even after the rebasing exercise, we saw a 3.9% increase on a month-to-month basis as at March. That's the highest we have seen so far in the year. We're beginning to see that consistent moderation. I think the lowest we had in the period was sometime around September, when we saw a 0.72% reported month-to-month inflation. This 1.22 is not out of place. And in December, even if you tick up to about 1.5, you will still see that your headline inflation is likely to drop, to the 13% threshold, if not 12%, by the end of December.
Brilliant breakdown, as always. But I'm looking at some fundamentals now surrounding these inflation figures. We see a bit of stability, many would say, in our economy, and some figures that are looking pretty good. Let me say indicators that are looking pretty good than what it used to be. But I'm still worried, and I know you are also worried about the fact that some of these policies, or the fallout of these policies, how it's impacting the man on the street. Now it's Christmas, where everybody's supposed to be buying, spending, and all of that. But when purchasing power is low, what else do you expect? So I keep asking analysts like you that help us understand these issues, that what do we do? What would you advise government at this very critical time? 2026 is a pre-election year, and many are already worried and thinking that attention might shift from governance. So tell me what you think can be done, and as quick as how, maybe in the short term, medium term, and long term.
Well, I think that the government has been very focused in tackling all of our myriad of macroeconomic problems. Now, I said government is focused because you will notice, typically, when you are taking some very quick decisions, sometimes that can be very painful. A government that is really not courageous will likely want to toe the path of, let's not put in so many at a time. But, I think I've given that analogy before, in the studio, that, Nigeria's case, especially the state of our economy, looks like, a patient that is in coma, and you need to do something to bring that patient out of coma. When somebody is in coma, whatever you need to do, including painful drugs that you need to administer it. Because if you don't do that, the patient can cross to the other side in that state of coma. So, and I think that is the situation we had when this government came in, and especially when there was a change of baton at the central bank. And what we are seeing consistently are those painful decisions that, and like you said, to the man on the street, and we are all feeling the pinch, by the way, to the man on the street, it looks like, it's too insensitive. But we don't have any other options. For instance, if you look at some of the painful decisions that are fed into our inflation, a case in point is the removal of subsidy on petroleum products. That was not doing Nigeria any good by any standard. Because what we had at a point was people coming to the borders of Nigeria, buying these products and crossing to the neighboring countries to sell them for a premium. At whose expense? So, and if you look at the removal of subsidy, it has its own implication on the headline inflation that we are reporting at this time. You understand? So, but then government had no other option. You need to tackle the corruption going on in that place, to ensure that there is efficiency in terms of government resources are already scarce. You see all our budgetary cycle, and our government is trying to, fit into almost all the sectors of the economy as much as possible. So with scarce resources, you can't do much. And like I dare say that even if you bring in the best of minds globally, at the stage that Nigeria was, there was no much option for nobody to do, and I mean, and it was consistent. If you follow that electioneering campaign the last time, across the three major leading candidates, everybody mentioned that subsidy had to go, and it's the right thing to do. So there was nothing government could have done about that. I mean, that's just a case in point. The other thing is the electricity sector, which is a sector where much investment was needed. And as long as you did not tackle the problem of tariff and the cost reflective tariff, you were not going to go anywhere with that sector. And the government also took the bold step to ensure that that was also addressed. And that's look at the exchange rate issue that we also had. At a point where you had multiple layers of exchange rate within the same economy, there was nothing more the government could do or the central bank could do than to ensure that you have a market reflective exchange rate. And that's the benefit we are now seeing at the moment. So the truth is that there is not much the government will do in terms of putting appropriate policies that will make the economy thrive. What the government is still lacking, in my opinion, will be how to ensure that the limited resources and the resources that we are now able to free up, how much are we now able to allocate them the best way? If we are fixing infrastructure, how do we ensure that we are getting the best price and there are no layering of, costs around it? Those are issues that I think most Nigerians will also have with any government. Because of course, Nigerians are like we are like the investors in this economy, or like so to say, if Nigeria was a company, Nigerians are like the shareholders. We will make the management to account. The management in this case being the government, will make you to account for every of your action and to ensure that every action you are taking, is beneficial, not just to the overall economy, but of course, it makes the life of people better. Other things that people will advocate for is for government to put in palliatives. I am not in support of palliatives because number one, sometimes they get layered with corruption, and some other times it doesn't even achieve the objective. Now, what the government can do is to continue to create this enabling environment. Now, people need more money because if they're able to work and they are able to be paid better, then they can have the money that they need. So the government should create an environment that will allow people to be able to get gainful employment. And the way to do this is some of these policies we are putting in place. Very soon, perhaps Nigeria will be relisted on the FGN, the sovereign bond index, for example. That's a good signal that we were kicked out of it, I think sometime in 2015 or 2016, thereabout. So there are so many other policies in place that the government can do that will make Nigeria attractive. Today now, we will say that Nigeria is not an attractive investment destination for foreign direct investment. Because we can get the hot money, foreign portfolio investment. But then for foreign direct investment, we may not be that attractive, especially for foreign investors who do not understand our terrain. But for local investors who have done business, a case in point is the Dangote Group. They've done investment over and over and over. They can see the opportunities, even amidst all of the regulatory and policy bottlenecks. But again, we must present the country as viable for critical infrastructure investment. And of course, long-term investment, that will ensure that more investors can come in. Because when more investors come in, people are more gainfully employed. The purchasing power that you mentioned of the people will then increase, and then they're able to afford all that they need to afford. In the short term, government cannot do much. To answer your question straight, in the medium term, we should continue with this policy or policy reforms that we're doing. But in the long term, these things will pay off. Sometimes some of these policies may not even pay off until when this government is finally out, even if the government gets a second term, because these were years of neglect that things have not been done, and then once they get done, it will take time for things to begin to shift. So, but definitely we are on the right path, and we should not lose courage. There are pain points, that everybody feels. you know, and sometimes the citizens just want government to be empathetic, to also feel their pain, because, you know, as citizens, you think that, oh, you are having to do more, but government, because they are in power, they may not be doing so much because everything is available for them. So sometimes it's that empathy that the citizens are requiring, but not that we should go back to paying subsidy, or we should, further, what do you call it now? Restrict our foreign exchange market, so that we don't get into we can't get into that space again. We have moved past that, and Nigeria is on the right path as far as those economy policies are concerned. Of course, politics is a different thing, you know, of course, as we move into 2026 and looking into 2027.
Well, interesting stuff there. I just thought we are limited with time today, but I wish that you grant us our opportunity to have this chat again, maybe once more before we end the year. Mr. Robert Omotunde is partner MDU Consulting, and thank you so much. I'm sure you're enjoying your new role.
Oh, yes, I am. Definitely.
Right.
Thank you so much.
So we'll talk now. I hope we'll have this chat once more before the few weeks to end this year. Thank you.
All right, now. Thank you. My pleasure.
All right then.